Yeah, hi everybody. It is March 21st, 2015. And I had just glanced at CNBC yesterday. I have it on, I'm here in Memphis. And I got a forecast, or it said on CNBC, I believe it was before I went to work, that the Nasdaq had just broke 5,000, or it was over 5,000. I think it's been over 5,000 a few days, but it hit, I think 5,040, I believe was the market hit. So I used to follow the stock market quite a bit. So I said, hey, why don't we look at some historical charts and see what's going on? So as you can see, this is basically I hate that word. I used to listen to a broadcaster in San Francisco that would say basically, and he would make fun of people that say it. So try to weed that out. But if you look here, this chart goes back to 1988, and if you go to the Dow Jones Industrial chart, it suddenly there's no history before 1988. I'll kind of guess why, but let's just look here. This is good. Right here in 1988, that was certainly the beginning of a secular bull market. Without a doubt. We went from on the Nasdaq to 500 in 12 years. So if you'd have put just your money in a Nasdaq market fund, if there was such a thing at the time, if you'd have bought the QQQs, because this very much follows the QQQs, if you'd have bought them in 1988, you would have had a 10-bagger by 2000. By the year 2000. In 12 years, your money would have grown 10 times. Which is pretty damn good. Pretty damn good. But then you would have gotten cracked and hit hard, and you'd have been almost back to square one in a matter of 2 years. So we fell to there. And as of yesterday, you're back to square one. So I'm sure there was a lot of people who bought individual stocks in there that were way ahead of that, because there were individual stocks on the Nasdaq who did much better. And as you can see, historically, the Nasdaq is relatively strong as of late. In fact, it may that the relative strength index may indicate that it's stronger than the S&P 500, because this is comparing it to the S&P 500 over time. See how high this was? It's really high here just before it fell, and it's pretty high up here too. So that may say, well, maybe it's ahead of itself. This one, the stochastic, would also indicate that it's ahead of itself. Maybe that's not the best place to put the money. Sorry about that. Okay. So then I went and I pulled out a chart of the Dow Jones Industrials. And when I went on this bigcharts.com, it stopped at 87. And I mentioned that earlier because right here, it doesn't look so big now, but it was an enormous drop. I remember going to work. I lived in San Francisco the day that happened, and there was panic. That's almost like a one-day drop. See here, this is the year, this is 2001. After the 911, was a drop in here, and it looks a lot bigger, but if in scale, this might be bigger. But if you just look at the Dow Jones, if we looked at the Nasdaq, it would be even more brutal. But this here looks like a big W. A W means win. So just a simple chart reading, I would say that we began a secular bull market right here. And I say we've got lots of room to run. I think that you should stay in the market. And I think that we're going to keep going up. And I would say that we're at least going to go up here at least to maybe 9,000 in a couple of years. The Dow, even better, and in selective stocks within the Dow, you're going to do better if you've got stock pickers. This looks like a bear market to me. I think we've already had the bull market. These people who say we've had World War III is coming, we've already had World War III. It's already happened. And I do agree that what's fueling this is what Mark Farber said, the people who have money are just printing money, and nobody has anywhere else to put their money except in the stock market, and that's going to fuel this, and it's going up. So whatever the reasons are, as a chart reader, I don't care. Whatever the reasons are is not material to me. What's important is that they go up. So I would go ahead and keep investing. I don't see any signs that we're going to drop or anything's going to happen. Okay, take care.